If after watching this video you are still having issues with psychology, you are still having problems, you are still making psychological mistakes like over trading and revenge trading, not analyzing the market, not being patient, and you are still making those psychology mistakes, then they suppose beat you. They're supposed to be flogged mercilessly, because in this video I will explain to you, like I'm explaining to a 2-year-old boy, how to hack this psychology in forex. And it's not like it's an easy thing that you just after hearing this psychology you just know about. It's not as easy, but it makes it so simple, like you know what to do specifically. Do you understand? So, and psychology is 80% of forex. So that means if you can hack psychology, you're already profitable, because you'd have hacked 80% of forex. So 20% is just your strategy, whatever strategy you're using. So far it has an edge, it will work. So let me now start from where you need to focus on. Like, okay, no, before we do that, let's first analyze what psychology is, how psychology affects you. And basically, like Mark Douglas said, that psychology is just the collective emotion of market participants. Do you understand? Like, a lot of people are making decisions in the market, and then that decision is influencing the market, and that's what psychology is. But that's just a rough sketch. I've explained what psychology is in details in my other video, so go and watch it if you want to understand psychology. But majorly what I want to explain in this video is how to hack this psychology, how not to make decisions based on emotions in market, how not to be scared when you lose, or how not to be overexcited when you win. That's what I want to explain in this video, and if you stick with me to the end, I promise you this will be the only video you need to watch about psychology. And how am I going to tell you a hack? This is a hack. I will give you a routine, not just telling you, oh, psychology, you cannot bring any emotion to the market, you cannot know. I will give you a routine, a step-to-step guide, what you should do to overcome psychology. So stick with me to the end. Let's get this. Now, number one, what is the number one thing you need to do in order to overcome psychology in markets? Number one thing is preparation, or pre-market preparation. What do I mean by that? Before you even think about trading at all, before you even say you want to trade any day, you have to prepare before you enter the market. Before you even open the chart at all, you have to prepare. And what kind of preparation am I talking about? Number one, you are not supposed to trade every day, right? But let's say on the day that you want to trade, on that day, before you even open the chart, before you even think about, oh, you want to make money or you don't want to make money or you want to lose money, before you even deposit any amount, I don't know if you get, before you even open the chart at all, you have to do some things. You have to prepare. Now, what's the number one thing that you need to do? And this will be on a daily basis. Like, you'll be doing this every day that you want to trade. You should not trade every day, like I said, but every day, all the days that you are trading, you should do this. Number one is review your trading rules. Now, what are the trading rules? You need to have rules. If you don't have rules and you are trading, then you are doing nonsense. You need to have rules. You need to set rules for yourself. Okay, number one, I will not overtrade. Number two, I will not use emotion and trade. Number three, I will not do this, I will not do that, I will follow my plan, I will do this. You need to have those rules. After then you will now go, and before you enter the market, you have to go and read those rules. Okay, today I said I will not do this, I will not do this, I will not do this. By reading them, you've reminded yourself what your psychology should be about, what you are going to do in the market. Now, that's not all, because if you do that, you can still forget and then you still make those mistakes. So what do you do next? Instead of making those mistakes, you do a mind reset. A mind reset. What do I mean by that? You see, that loss that you had last week, or that loss that you had yesterday or day before, or that win that you have day before or last week, you see, those things are not gone yet though. You think, okay, I've traded, that one is no. You see, when you lose, the fear, I'm gonna make the money back, the revenge trading, or all those emotions are still there. Even if it's a week, it can still be there for a week. You have to do something they call mind reset. And how do you do that? Accept the loss. If you have lost, accept the loss. Oh, that money is gone. Let's focus on this amount. I can still push this amount to the desired amount that I want to do if I follow my plan. Now, that's a clear reset of mind. Forget that loss. And if it was a won, forget that you won. Oh, market is brutal. This is how you remind yourself. If it was if I had win the previous day, you'd be like, market is brutal. Market can take all the money plus the profit plus everything. So let me be careful analyzing this chart again. That's a good mind reset. So you have to reset your mind. That's number 2. Now, number 3 is that you have to visualize. You have to visualize what you want to do in the market. You have to visualize how you want to trade the market. Okay, today I want to be very calm in the market. I want to make decisions based on what I'm seeing, not just because I want to make money. You have to visualize how you are trading it. Okay, will I just analyze the market and then go and then set my alerts and limits and then leave the market, or do I want to be watching the market like this? Visualize everything so you will know how you want to attack the market. That's the third thing you need to do before you do what? Before you open the chart at all. That's how to hack psychology. Before psychology plays out when you are trading. So that's just before. Now, after preparation, after pre-market preparation, what do you do next? Then you analyze your market. Now you can open charts. You open your trading view, you open your MT5. Now look at what market is doing. Now you need to do 3 things too in this one. You have to do fundamental analysis, you have to do technical analysis, and you have to do liquidity analysis. Yes, liquidity analysis. Now, what is fundamental? You just check news, check the current events, how they will affect the market, how they will affect the week, how they will affect the month. Like New Year will affect the whole year. So check for those events and then analyze, like know them that okay, this will affect the market in this way and all of that. That's fundamental analysis. Now go to your technical analysis. If you are using SMC, analyze through SMC. If you are using ICT, analyze. If you are using trend line, analyze. Whatever strategy you are using, apply them meticulously. Like, be careful analyzing the market. And one thing about analyzing the market is that do not analyze on lower time frame. Do a top-down analysis. Do not be looking at noises in 1 minute or 5 minutes, or because you want to catch entry, you want to catch spike. No, analyze carefully, calm down and analyze. But anyways, so after you analyze technically, whatever you and another thing is, do not analyze if you are using indicators. Do not analyze based on indicators alone. Don't use Fibonacci and RSI and moving average only to give a signal and then take trade. No, you have to understand price action. There's something they call price action. It's key to every strategy. You have to understand it and then analyze the price action. If you don't know price action, go and learn price action very well. Major structure and minor structure, internal and external. Then after then, you now do a liquidity analysis. You have to understand where liquidity is. In every market, there is a story behind it. You cannot just say, oh, okay, it's buying, let me. No, you can see an engulfing candle and it will come down. You can see a bullish Guinea-Corn, morning star, head and shoulder. You can see any pattern and then it will go against it. If you don't understand price action, you have to understand and you have to know where liquidity is. So mark out your liquidity, know where you. I wish I can like show you this on a laptop and then project it so that you'll be seeing this, but I will get there. Don't worry, I will give you all the content. But for now, let me just explain it like this. So after doing your analysis and stuff, then this is now the execution phase. The third phase is the execution phase, where you take trade. Go. Now there are methods to taking trade. You cannot just say you want to. You've seen it. Oh, I've seen it. No, you have to calm down. So let me now tell you how you take trades. The first thing to consider when you're taking a trade is that, is it a high probability setup? Now let me give you an instance. You see a chart on, let's say, 15 minutes time frame, and then you're like, okay, let me take this trade. Then it will just come up here like this and I'll just leave. I don't want to stay long in the market. If you are looking at that and it's not high probability, like it's just like, okay, it might not reach there because it's 15 minutes. Do you get? You might lose. You might continue losing. So you have to calm down and analyze on the bigger time frame and then see the setup, see everything. Then you do a top-down analysis, go on the lower time frame, take trade on the lower time frame, and then do not target much. It's just based on, this is about your strategy anyways. Whatever strategy you are using, look at the targets, where the market is going, and put your TP, your stop loss there and leave. Now that's number one. High probability setup, that's number one. Number two is risk management. You see, people always think that, oh, since I have $200, I cannot risk. Your risk management is, let's say, $50 out of that $200. Now you now see a stop loss that is $100. Instead of you reducing that lot size, you say, I cannot risk $100 since my loss is $50. You now put your stop loss at the $50 because your own money, you're using your money to determine what the market will do. No, it doesn't work like that, my bro. You have to analyze the market, know where your stop loss is, where the stop loss that the market will invalidate that analysis that you did. If you reach that point, that's where you put your stop loss. So instead of like putting your stop loss there, you reduce your lot size. Do you get? You reduce your lot size to the one that will be equal to that stop loss. Then you're good to go. Do you get? Then another thing is, if you want to take a trade, you have to have a multiple confirmation. Like, you cannot just see, oh, it has print engulfing candle, let me just enter. No, you have to know that, okay, it has taken liquidity, now it's going up. That's number one. Number two, price action. This is a normal price action because if you see this, there's a volume and all of that. That's number two. Number three, you have to see, okay, it has printed a particular pattern. That's number four. Then if you use indicators, okay, my indicators is saying, RSI is saying it's overbought, and Kineko is saying it's undersold. Then you know that, okay, I have multiple confluences. Then you enter the market. Like, if you are considering this thing, see, it's not easy to be considering this thing every time you want to enter the market. But if you are not doing that, you will overcome psychology. And as time goes on, it's just become part and parcel of you. You will not even think about it before. You don't have to go and read it before you start the market, like before you trade, because it would have been your natural distinct. You see, psychology is a mindset. Profitability is a mindset. I don't know how to explain this, but then anyways, I hope you guys understand. So after the execution phase, after you've finished taking your trade and then you know that, okay, and then your trade hit CP or your stop loss, what do? You stay out of the market. You cannot say you want to. You see, no matter how much you control this psychology, there will still be some emotions. Even for big traders, there are still emotions that will affect you. So instead of you trading again to hit another TP or two, since it has invalidated your analysis, your chart, your whatever, then you have to stop trading. Sit back, wait first, leave the market, because all the analysis you do is wrong. That's the meaning of that. So leave the market first. That should be your number one rule. First, even if it's once, just leave the market once, and then go and journal, write down, okay, what did I do wrong? What was my mistake? If it was a win, okay, what did I do right? If it was a loss, what did I do wrong? You have to now journal, write it in a journal. After you've left the market, then after you've done that, then you now look for a way to refine yourself. Okay, this was how I analyzed this. How can I correct it? Do you understand? Okay, this is how I can correct it. I swear, see, I'm swearing, if you can do this every day, you will be profitable in no time. I don't want to know. You will be profitable. It's so hard because money is a spirit. When you have your money and you see your money going, you'll be like, emotion will come in. If you can just lock that emotion and just lock in, I'm telling you. And the last thing you need to do is end of the day mental reset. That's why I call it end of the day. Like at the end of the day, you now do a total mental reset. Okay, I won today. Now that trade is gone. Today is gone. We are starting another day entirely. Okay, I lost today. That day is gone. You have to do a mental. You have to detach totally from the market. Don't let your emotions remain there. So after you've detached yourself from the market, you erase your emotions completely, and the next day you can attack the market very well. Like you can approach the market very well, rather. Do you understand? So if you can do this, if you are not profitable, come and arrest me. If you are not profitable within 3 months and you are doing this consistently, come and arrest me. That's how sure I am, because this is what has been working for me. I am making real progress, like massive progress in my forex journey, and I hope you too are. That's why I'm making this video, so that everybody will win, and I hope you are. So I'll see you all in my next video. Please subscribe to my channel, and please like, comment, let me know your ideas. Let me know what you think about what I'm saying, all this forex psychology. If it works for you, also comment. If you have been doing it, comment. I'll see you in my next video. Ciao, guys.